Have you ever tried to send money abroad? It's slow, expensive, and full of paperwork. The process relies on banks and wire services, middlemen who take a cut and make you wait. But what if you could send money instantly, directly, with almost no fees? Imagine tapping a few buttons and your money appears in your relative's digital wallet, anywhere in the world. No banks, no waiting, no gatekeepers. Just technology doing the verifying and record-keeping. This radical idea challenges everything we know about money and power. And the most famous attempt to make it real? Cryptocurrency. Let's dive in. Cryptocurrency is money made for the internet. Digital cash you control, not the banks. It's the rebellious teenager of finance, refusing to play by the old rules. Unlike credit cards or apps, crypto lets you move value yourself, no permission needed. The real revolution? Decentralization. No central bank, no CEO, no government in charge. Instead, a global network of computers keeps the system running. It's a financial system with no one in the driver's seat. Exciting for some, terrifying for others. For the first time, we have a real alternative to government-issued money. It's a grand experiment, rewriting the rules of ownership and transactions. Whether it's the future or a spectacular failure, it's impossible to ignore. Crypto is here, it's weird, and it's changing everything. Let's break down how it works. So, what is cryptocurrency? You've probably heard the word thrown around in the news, on social media, or maybe from a friend who's really into tech. But what does it actually mean, and why is everyone so excited about it? At its core, cryptocurrency is a type of digital token, but it's not just any digital file. It's protected by cryptography, basically super advanced math and computer science that make it nearly impossible to counterfeit or hack. Imagine it as a super secure digital file that represents value, like money, but it only exists in the digital world, on computers, servers, and across the internet. There are no physical coins or bills to hold. Unlike traditional money, such as dollars or pounds, there's no government, bank, or central authority that issues or controls cryptocurrency. It's completely decentralized, meaning it's run by a network of computers all over the world. That means no one can just decide to print more and flood the market, which could make your money worth less. The supply is often limited by code, making it more predictable. Your ownership of cryptocurrency is tied to something called cryptographic keys. There's a public key, which works like your account number, and a private key, which is like your secret password. Only you should know your private key. If you lose your private key, there's no customer service to help you recover your money. It's gone forever, so keeping it safe is absolutely crucial. One of the coolest things about crypto is that it's borderless and always on. You can send value from Tokyo to Toronto or anywhere else in the world in just minutes, 24/7, no matter the day or time. It's not tied to any one country or government, but instead to a global network of users and computers, making it truly international. That's why people call it the Internet of Money. It moves as freely and quickly as information does online. But with all this digital magic, how do we actually know the money is real and transactions are trustworthy? That's where something called the blockchain comes in, and it's the backbone of how cryptocurrencies work. Blockchain is the public, unchangeable ledger behind crypto. Think of it as the foundation that makes cryptocurrencies possible, providing a secure and transparent way to record every transaction ever made. Imagine a digital record book, not just stored in one place, but copied and synchronized across thousands of computers all over the world. This means that anyone, anywhere, can read the record, but no one can secretly edit or erase it without everyone else knowing. Every time someone makes a transaction, it's bundled together with others into a block. This block is then verified by a network of computers, ensuring that all the information is accurate and legitimate before being permanently added to a growing chain of previous blocks, hence the name blockchain. Each block is securely linked to the one before it, creating a continuous, tamper-proof history of every transaction ever made. If someone tried to change even a single detail, it would break the entire chain, making fraud nearly impossible. The ledger is completely transparent, Anyone can look up and verify every transaction that's ever happened. However, the identities behind these transactions remain hidden, represented only by strings of numbers and letters, not real names. This radical openness builds trust among users, allowing people to do business with each other without needing to rely on a central authority, like a bank or government, to keep things honest. Security comes from decentralization. Because the blockchain is spread out over so many computers, there's no single point of failure. If one computer goes down, the others keep the system running smoothly. To successfully hack the blockchain, you'd have to change thousands of copies at the exact same time, across the entire network. This level of coordination and computing power is so massive, it's practically impossible. It's like trying to rewrite a book while the whole world is reading it aloud together. Any attempt to change the story would be instantly noticed by everyone. In this way, blockchain technology forms the backbone of crypto's trust, making sure that everyone plays by the same rules and that the system remains fair and secure for all. Now that you understand the technology, let's meet the stars of the crypto world, the digital currencies that have captured the world's imagination and are changing the way we think about money. Bitcoin is the original cryptocurrency, often called digital gold. It was created in 2009 by the mysterious Satoshi Nakamoto, whose true identity remains unknown to this day. Bitcoin was designed to be a decentralized form of money, free from government control and traditional banks. Its creation marked the beginning of a new era in finance, where anyone, anywhere could send value across the globe in minutes. Only 21 million Bitcoins will ever exist, making it incredibly scarce. This built-in limit is part of what makes Bitcoin so appealing to investors, who see it as a hedge against inflation and currency devaluation. Like gold, its rarity gives it value, and many people now view it as a digital store of wealth. But the world of crypto is much bigger than just Bitcoin. Over the years, thousands of new cryptocurrencies have emerged, each with their own unique features and purposes. Ethereum is the second giant in the space. It's more than just digital money. It acts as a global supercomputer, running decentralized applications and smart contracts. Its native currency, Ether, fuels this entire ecosystem. Ethereum's real innovation is the smart contract, self-executing code that automatically enforces agreements. This technology powers everything from decentralized finance, or DeFi, to the booming world of NFTs, enabling new ways to trade, borrow, and create digital assets. Beyond Bitcoin and Ethereum, there are thousands of altcoins. Some are serious projects aiming to solve real-world problems, while others are playful or experimental, like meme coins such as Dogecoin, which started as a joke but gained a massive following. Some of these altcoins are designed to be faster or cheaper than Bitcoin, offering quicker transactions and lower fees for users around the world. Others are built to power video games, digital collectibles, or even manage supply chains, showing just how versatile blockchain technology can be. Then there are stablecoins, cryptocurrencies pegged to real-world assets like the US dollar. These coins offer price stability, making them useful for trading, payments, and protecting against the wild price swings common in crypto. Think of stablecoins as the sensible accountants in the wild and unpredictable crypto zoo, keeping things balanced and orderly. The crypto universe is vast, weird, and constantly evolving. New coins, projects, and innovations appear almost every day, making it an exciting and sometimes confusing space to explore. But with all these options, why do people actually use cryptocurrency? Is it just for investment, or are there real-world uses? Let's find out. Why use crypto? For many, it's about speed and cost, especially for cross-border payments. Sending money internationally with crypto is fast and cheap, a game changer for families and workers worldwide. Crypto also offers financial access to billions who lack traditional banking, just a smartphone and internet needed. In unstable economies or under oppressive regimes, crypto can protect savings from government seizure or inflation. For others, it's about investment and speculation, hoping for big returns, despite big risks. Some see Bitcoin as digital gold, a scarce asset immune to government money printing. It's a way to preserve wealth outside the traditional system. Crypto is also a bet on a new open financial future. Whether for payments, protection, or profit, millions are joining in. But it's not all upside. Let's talk about the risks. Crypto is risky. Think Wild West, not safe deposit box. Prices swing wildly, fortunes are made and lost overnight. Scams are everywhere. Pump and dump schemes, fake coins, phishing attacks, and shady influencers. If it sounds too good to be true, it definitely is. Hacking is a real threat. Exchanges and wallets have lost billions to cyber attacks. Lose your private key or get hacked and your money is gone for good. There's no insurance, no customer support. You're your own bank and security chief. Regulation is another wild card. Governments are still figuring out how to handle crypto. Some embrace it, others ban it. New laws can shake the entire market overnight. The future of crypto depends as much on lawmakers as on technology. So who's actually getting on board? Despite the risks, crypto is going mainstream. Major companies now accept crypto payments, and financial giants are offering crypto products. Even banks that once mocked Bitcoin are getting involved. Governments are exploring their own digital currencies, CBDCs, trying to harness the tech without losing control. The tech is evolving fast. Web3 aims to build a user-owned internet, and NFTs are redefining digital ownership. The future? Likely a mix of old and new. You might use stablecoins for payments, Bitcoin for savings, and banks for your paycheck. Crypto and traditional finance will probably coexist and interact. The financial world is becoming more digital, diverse, and interesting. The crypto story is just beginning, but is it a revolution or just a fad? So is crypto a revolution or a bubble? The truth is, it's both. Under the hype and chaos lies a powerful idea: open, accessible, decentralized finance. It's about shifting control from big institutions to individuals, using technology and math instead of trust in middlemen. Crypto's real impact may be the questions it forces us to ask about money, power, and digital freedom. Whether or not you buy Bitcoin, the movement is changing how we think about ownership and trust. The tools, blockchains, smart contracts, could reshape more than just money. The future is unwritten, and for the first time, we all have a say. The conversation about the future of money is just getting started.